Welcome to my YouTube channel, guys. So today I'm going to show you guys how to make $100 a day. Before I even show you guys that, let me show you guys the proof first, right? So this is my 100k funded account. I've been trading since last year, and you can see my win rate is 52%, very low. And you might be wondering, how does it make $100 a day with that kind of win rate? Well, let me show you guys my daily results, right? So if you scroll down, you can see how I perform for this week. On the 14, I make 200. 13, 153. 12, 194. On the 9, I take a loss, but on the 8, I make $300. So basically on a day, I can range from making $100 to making $300 a day. So if I can make that, then I think I can show you guys how to make $100 a day. So before you can even make $100 a day, you need a capital. There's no way you can make $100 a day without no capital. So there's two ways you can gain capital. You can go with the prop firm, or you can go with personal account. I will usually recommend go with prop firm because it's cheaper, right? So let's say you decide to go with prop firm. You're gonna spend, let's say, on $400, and you have to pass 2 phases. And if you pass those 2 phases, you're gonna get funded 100k. And when you get funded 100k, you have to risk around 0.1 or 0.2%. Most traders, this is where they fail and blow their funded accounts, right? They will start risking 1% or 2% or 3% on their funded account, and they blow their accounts, right? Don't do that. So win rates, you only need 50%, right? And after you pass your funded account, you're gonna get a refund. You're gonna get your money back. So basically you're losing nothing unless if you blow their account. Rules, prop firm have plenty of rules. They have a consistent rules, they have a news rules, so they have a lot of news you gotta follow, rules you gotta follow, and if you don't follow it, you can lose the account. So my fear is the prop firm shutting down, because imagine you have worked really hard and get funded up to, let's say, $1 million funded, and now you're living off that, and all of a sudden the prop firm shut down, right? So you see, that is the biggest fear, right? But let's say if you choose a personal account, right, to make $100 a day, you need to deposit $10,000. And I know most traders are gonna be like, but I can make $100 a day with $1,000. No, you don't. You're going to blow your account. I promise you, you're going to blow your account. If you make $100 a day with $1,000, comment down below. I want to see. Please send me your strategy. I want to try it. All right. So on a personal account, there's no phase. You're instantly funded, and risk, you got to risk around 1% or 2%, right? Win rate, same thing, 50%. That's all you need. No refund. You blow your account, your money is gone. No rules, you create your own rules, and your money is safe. So there's 2 brokers. If you choose a regulated broker, your money is 100% safe. If you choose an unregulated broker, yeah, your money is not that safe. All right. So from these 2, you can pick one and see which one is perfect for you. And I'm going to show you the strategy that you're going to use to pass the prop firm and make $100, or deposit your money in a personal account and make $100 a day. So let me show you guys the strategy that will make you $100 a day, right? So we're gonna be using the 5-minute time frame, right? And we're gonna be using the 200 EMA, right? It's a very simple strategy. So my EMA setting, this is my EMA setting, so you can use that if you want, right? So let's say you have a 200 EMA going like this, all right? And we have markets moving like this. Let's say market come down here and close full bullish body, right? Do not enter. Even if you show that, do not enter, right? It might go up and break, come back down. Let's say it goes up again and come back down to this level, and this time around it show you a wick, a rejected level, right? A rejected level, and show you a wick and with a small body, right? To make that clear, let me show you guys this, right? So this is what I'm talking about. If you show you this, if you're trying to take a buy and it show you this, right? It show you a wick, a long wick, and a small body, right? You can enter. If you're trying to take a sell, right, it show you a long wick and a small body, you can enter, right? So if you show you that, you can enter, right, and aim for 1 to 3, right? You can aim for 1 to 3. So basically you're risking $100 to make $300. All right. Another thing, if it goes up, hit your take profits and come back down again and start consolidating, as soon as you start consolidating, it doesn't even matter if you hit, if you come back down, right, and show you weak and small body, do not enter, right? The reason why is it's already consolidating at that level, so anything can happen. You want a clean movement, which I will show you guys an example right now. So right, you can see on Euro USD, we can see a nice rejection on the 200 EMA. If we show you a nice rejection on the 200 EMA, you can enter. You can enter for 1 to 2, like 1 to 3, right? You can see right here, market. This is a nice trade, 1 to 3, and you can see the same trade right here again, a long wick and a small body, right? Which shows that it's respecting the candlestick. You can enter right there, put your stop loss just above the wick and aim for 1 to 3, right? Right here you see market is consolidating. Do not enter. That's not the enter zone. You got to wait for market to move away from that consolidation zone. Let's say move away, like we see I move away and come back here, then you could have enter. Not a good trade. Not a good trade. This is not a good trade. This is not a good trade. This is a good trade, right? You can see a huge wick, a long wick, and a small body, right? Something like that, that shows that, hey, I respect the 200 EMA. Then you can enter for 1 to 3, right? And we can do the same thing all over again. This is not a good trade. This is not a good trade. Not a good trade. This is not a good trade, and this is a good trade. Same thing again, long wick. Let me just zoom in. Long wick and a small body, and aim for 1 to 3. As you can see again, market was consolidating, right, and touch before going back up. Do not take a trade there. Do not. Even though if you show you a long wick after consolidating, do not take a trade, right? Let it just go, right? And when it comes back, let's say it consolidates right here and it move up and come back down and it show you a nice long wick and small body, then you can do it. You can enter a trade. So this is not a trade, right? So this is not a good trade. This is not a good trade. This is not a good trade. I'm gonna show you 2 more examples so you guys can understand. This is not a good trade. This is not a good trade. This is not a good trade. And this is a good trade. You can see right here, show you a wick and a body. This is a good trade. You can aim for 1 to 3 and boom. I'm trying not to show you guys a loss because it's not gonna be 100% win all the time. This is not a good trade. There's times that it's gonna be a loss, like right here. Like right here, if you enter right here, put your stop loss. It did go to like 1 to 2, right? I would say sometimes put your stop loss to break even at 1 to 2. If you want to stay all day till 1 to 3, you can put your stop loss at break even. But let's say if you did not put your stop loss at break even, then this could have been a loss, right? So I'm going to show you guys one more example and I'm going to be calling it a day. This is not a good trade. You can see right here, this too is not a good trade. Not a good trade. It got to show you a nice long wick and a small body. I'm trying to wait for one more and I'll call it a day. So this is a good trade. You can see right here, right? This is not a good one. This is not a good one. We can see right here, market come. Let me just zoom in and create, like, you can see right here, see the wick, rejection, same thing. Just enter right there, boom, and aim for 1 to 3. So That's the strategy. It's a very simple strategy. So anyway guys, please subscribe, punch the like button.